Welcome to Financial Freedom FX. In this video, I'll show you the most powerful strategy to catch strong bullish trends using a simple but highly effective combination: trend lines, candlestick patterns, and support zones. We'll break down this chart step by step and reveal how confluence between these three tools can give you powerful buy entries. Let's dive right into the chart. First, observe the market at the bottom left. We start in a downtrend, but soon the market finds strong support. This is the first key. The price reacts to the support zone and forms a higher low. Then we draw a bullish trend line, connecting the lows. This ascending trend line shows that bulls are slowly taking control. The chart clearly marks this trend line, and you can see how price respects it multiple times. The trend line acts as dynamic support. Next, the market approaches a resistance zone where price previously dropped. It reacts, pulls back, but crucially, the pullback finds support exactly at the trend line again. This creates what we call a confluence zone, where horizontal support and the upward trend line intersect. This is not just support, it's double support. Here, a bullish engulfing candle forms. This is a major reversal candlestick pattern, where the green candle completely engulfs the red one before it. This is our first powerful buy signal. After the bullish engulfing, price breaks resistance and forms a new high. It then pulls back, and once again, where does it stop? Right at the support and trendline zone, another confluence area. This time, a morning star pattern appears. This is a three-candle bullish reversal pattern. The first candle is bearish, the second is small or indecisive, and the third is a strong bullish candle. This is our second buy zone. The pattern confirms that bulls are ready to push price up again. The market now makes another higher high and then pulls back again. But this time, something beautiful happens. The price returns exactly to the previous support zone and again touches the trend line. You'll notice this exact zone is labeled as confluence zone, support plus trend line. The market respects this zone once more. This repeated respect of the trend line and horizontal support is a strong sign of a healthy, bullish trend. A strong rejection candle appears. This is our third buy signal. Now that you've had three buying opportunities all from the same technique, you see how the market begins a massive rally upward. The price completely respects the bullish trend line, each time finding support at confluence zones. And with every rejection, the bulls gain more momentum. The final phase in the chart is marked as move up, where the price continues its bullish direction. This is how smart traders ride the trend, by entering at pullbacks, not at tops. Let's quickly go over the key candlestick patterns used in this strategy. Bullish engulfing, strong reversal pattern, where the bullish candle fully covers the previous bearish candle. Morning star, a three-candle pattern showing momentum shift from bears to bulls. Each of these formed right at the confluence of the trend line and support, giving us high probability entries. Candlestick patterns become more reliable when they form at key technical zones. This chart also teaches you how to draw and use trend lines effectively. Notice that the trend line is drawn by connecting at least two major swing lows. Once the second touch happens and price reacts strongly, the trend line becomes valid. Trend lines aren't just visual guides, they act as dynamic support. When combined with horizontal support and price action like engulfing or morning star candles, you create a powerful confirmation. Another key learning: support and resistance zones are not exact lines, they are areas. The chart marks these with rectangular zones where the price previously reversed. The market loves to retest these zones again and again. That's why buying at support after a retest, especially when the trend line and candlestick pattern confirm it, becomes a highly reliable trade. Let's break down the psychology behind this chart. Every time price pulls back and finds buyers at the confluence zone, it shows strong demand. The bullish candles show that buyers are stepping in aggressively. These areas become institutional interest zones, where smart money often adds positions. Instead of chasing price after a big move, this strategy teaches you patience. Wait for a pullback into a confluence zone, then strike with confirmation. This is a big bull trend strategy. It combines three powerful tools: trendline for direction and dynamic support, candlestick patterns for entry confirmation support, zones for key price reaction levels. When all three align, you get a high probability setup to catch the trend early and ride it confidently. This strategy is simple, clean, and works on all time frames. Start practicing it today. Now that we've seen how support, this chart beautifully shows how a downtrend ends and an uptrend begins, using a combination of a W pattern, flag breakout, and a trendline break. Let's break this down piece by piece. We start from the left. Notice how the market is in a clear downtrend. Each rally fails to create a new high, forming a series of lower highs and lower lows. This tells us the sellers are still in control. A strong descending trend line is drawn from the major high, connecting each lower high, showing the bearish pressure. But everything changes when the market hits the bottom. Instead of continuing down, the price forms a W pattern, also called a double bottom. This is a classic reversal formation, where sellers attempt to push price lower again but fail. The second low is followed by bullish momentum, indicating that buyers are entering aggressively. Now comes the key moment, trendline breakout. Price breaks above the long-term descending trend line with a strong bullish candle, but smart traders don't buy immediately. They wait. They look for confirmation, and here it comes in the form of a flag pattern, a short consolidation just below the previous resistance zone. This flag pattern is a powerful continuation signal. It shows that the market took a short rest before continuing the upward breakout. Then, boom, a massive bullish candle breaks the flag and the previous swing high. This candle also creates wick rejections from below, showing clear demand and market rejection of lower prices. The zone where this breakout happens is not random. It's where the previous lower high was formed. This area becomes a key zone breakout, and breaking it confirms a trend shift from bearish to bullish. This is the Bowie zone, marked clearly on the chart. You now have three confirmations: trendline breakout, flag pattern continuation, previous swing breakout. This strategy shows how powerful pattern confluence can be. Instead of relying on one signal, it uses a combination. W pattern, reversal of downtrend trendline break, end of bearish control, flag pattern, continuation of bullish momentum, zone breakout, confirmation of trend reversal. This multi-layered confirmation increases your confidence in the trade. Let's talk about the psychology. When the trend line breaks, many traders still hesitate. But when price forms a flag and breaks out again, momentum buyers jump in. The massive bullish candle traps the late sellers and confirms a new higher high. This flips the entire structure of the market, from lower highs and lows to higher highs and lows. This type of price action works on all time frames, from 1-minute scalping to daily swing trades. You can use it on Forex pairs, crypto, stocks, and indices. Just make sure to combine the right elements: trendline plus pattern, PAMON breakout zone, plus momentum candle. That's the secret formula shown in this chart. In summary, both charts in this video showed us how to catch trends early using support, trend lines, and candlestick confirmations. Identify powerful reversal setups using W patterns, flags, and breakouts. This is what we call smart confluence trading, combining multiple technical factors to increase your win rate. Add this to your trading arsenal and you'll stop chasing the market. You'll lead it. If you learned something valuable, hit the like button and subscribe to Financial Freedom FX. Turn on the bell icon to get notified when we drop more in-depth strategy videos, and comment below which part of this confluence setup is your favorite. Until next time, trade smart and stay profitable.